Get ready for the news that is shaking up the business world. We start today with M&P Logistics. This expanding logistics company has officially presented its proposal to the Boone County Planning Commission to develop a massive new parking area right in front of its Florence headquarters. We dive deep into the plans for this new facility, exploring exactly what M&P Logistics intends to build, how many trucks and vehicles it will accommodate, and the specific environmental measures they are putting in place to manage the impact on the Interstate 71 and 75 frontage. This development could completely reshape the logistics landscape in the region, so stick with us.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we are tracking the volatile fuel markets. The Department of Energy's Energy Information Administration has released crucial data showing that the national average price per gallon of diesel gasoline remained elevated this week. We break down the specific figures from the week of May 11, looking at the sequential gains and losses that define this week's market movement. We also explore the underlying geopolitical factors, including the joint strikes between the United States and Israel, that are keeping these prices stubbornly high, and how this impacts everything from transportation costs to the broader economy. Now, we shift gears to the high-stakes world of mergers and acquisitions in transport and logistics. Joining us are Unsoy Shia and Andres Mendoza-Pina from Kearney as they dissect the strategic forces shaping the next wave of M&A activity. We'll uncover how macroeconomic shifts and structural transformations are causing a clear split between traditional transport assets and freight and logistics technology, and exactly what kind of assets are attracting investor attention right now. Prepare for an in-depth look at valuation, data access, and the role of artificial intelligence in driving these major industry deals. And finally, we have a breakthrough in sustainable transport technology. Fuel Cells Works just launched the H2Easy iron powder hydrogen carrier, signaling a major step forward in decarbonization efforts. This is huge news for the future of freight, and we'll explore what this new carrier means for emissions compliance, long-term energy costs, and the strategic direction of the entire logistics sector. Don't miss out on these critical developments. Stay tuned right now. Mackenzie and Page Logistics, operating as M&P Logistics, has submitted a proposal to the Boone County Planning Commission seeking approval for an expanded truck parking facility located near its Florence headquarters at 7900 Tanners Gate Lane. The proposal aims to amend a concept development plan for approximately 1.7 acres, currently zoned as Commercial 2 with a Parkway Corridor overlay. If the zoning request is successful, M&P Logistics plans to construct a new parking area capable of accommodating 21 box trucks, 21 semi-trailers, and 50 passenger vehicles. The development also includes significant landscaping enhancements, such as installing a 3-foot berm along the Interstate 71-75 frontage and replacing the existing chain-link fence with a 5-foot-tall, 4-rail horse fence. Design engineer Justin Verst explained that the berm and vegetation are intended to minimize the visibility of parked trucks from the interstate, with plans to use evergreens to create a solid visual barrier for the tractors. The site currently features a smaller parking lot adjacent to a grassy field where a former commercial building once stood. M&P Logistics President Steve Hall stated the primary use of the proposed site will be for parking its truck fleet, as most vehicles will be parked empty awaiting dispatch. Hall also noted that the site will occasionally be used for the secure, supervised storage of high-value cargo, including AI-related equipment, though no loading or freight transfer operations will take place there. M&P Logistics is a nationwide transportation company specializing in dry van, refrigerated transport, white glove deliveries, and specialized freight services, with operational hubs in California and Florida. The company has 105 trailers deployed across the United States. The proposal is scheduled to be heard before the Planning Commission's Zone Change Subcommittee on Wednesday, May 20. The national average price for diesel and gasoline remained elevated during the week of May 11, according to data released today by the Energy Information Administration, part of the Department of Energy. The national average price per gallon settled at 5.639, showing essentially flat movement with a marginal sequential gain of just 1/1000th of a cent. This follows a substantial 28.9-cent sequential increase observed in the preceding week of May 4, which reached 5.64 and marked the largest sequential rise since the week of March 16. In contrasting data, the national average experienced a significant dip in recent weeks. For the week of April 27, the average decreased by 5.2 cents to 5.351. This follows a 20.5-cent drop to 5.403 in the week of April 20, which represented the highest weekly decline since the week of December 22, 2008. Prices have remained high due to ongoing geopolitical factors, specifically the joint strikes launched by the United States and Israel aimed at halting Iran's nuclear weapons development. Annually, this week's national diesel average is up 21.63 cents. Meanwhile, WTI crude oil is currently trading at $101.58 per barrel, up from $101.72 the previous week. Looking back to the start of the Iran conflict, the national average price for diesel and gasoline has risen by approximately $1.60, corresponding to an increase of about $30 in the average price per barrel of WTI crude over that same period. Financial Worldwide has analyzed the strategic mergers and acquisitions landscape within the transport and logistics sector, exploring how macroeconomic shifts and structural transformations are redefining deal priorities and timing. In a recent discussion featuring Soy Shio and Andres Mendoza Pino at Kearney, the conversation centered on the distinct dynamics between traditional transport logistics assets and freight and logistics technology assets. Regarding traditional segments, elevated financing costs and volatile freight markets are compelling buyers to prioritize scale, density, and resilient cash flows, leading to more conservative underwriting based on through-cycle earnings. This is creating a timing disconnect, where high-quality assets attract intense competition, while cyclical businesses delay transactions awaiting market improvement. Conversely, the freight and logistics tech space is driven by demand for automation, AI-enabled optimization, and workflow digitalization. Valuation in this area is increasingly tied to proprietary data access and demonstrable, scalable return on investment, pushing buyers to aggressively target high-quality assets or off-market opportunities. Andres Mendoza Pina emphasized that the health of the sector is intrinsically linked to the goods economy, making inflation evolution a key driver. While capital availability is not a major constraint due to private credit, sellers are exercising prudence, holding assets longer unless they possess an A asset, particularly in specialized areas like healthcare and cold chain. Investors are balancing high-value deals with heightened risk sensitivity, focusing on downside protection and strong growth stories, such as contracted revenues or mission-critical services. This scrutiny has extended the holding period for private equity funds to approximately 6 years, demanding compelling earnings before interest, taxes, depreciation, and amortization improvement plans to justify multiple expansion. Digital capabilities are central to acquisition strategies across the board. In traditional logistics, technology is used to enhance execution through AI for routing and automation to improve margins. In tech, the focus is on building integrated platforms leveraging AI for orchestration and real-time decision-making, with proprietary data access being the key differentiator. Freight market dynamics remain the primary determinant for traditional sector valuations, while tech valuations hinge on product stickiness and data quality. The market is showing signs of recovery, moving from a capacity-led downcycle to a capacity-led recovery, driven by regulatory pressures and improving freight fundamentals. Indicators of sector health point to assets like AIT Worldwide Logistics and specialized businesses with lower exposure to freight cycles as performers. Furthermore, Freight tech remains a hot area for M&A, signaling a trend toward consolidation alongside digitalization and the convergence of operators and technology providers. Looking ahead, the most plausible trajectory is a gradual recovery, with continued divergence between the two segments. A full return to previous peak levels is unlikely, but stronger freight fundamentals and geopolitical stabilization are expected to bring the sector to healthy pre-pandemic levels by the second half of the year. H2Flex has officially launched the H2Easy iron powder hydrogen carrier, a significant development for fuel cell technology. This new carrier system is designed to enhance the efficiency and performance of hydrogen fuel cells. The announcement comes from the FCW team, signaling a major step forward in the development and commercialization of hydrogen-based energy solutions. The H2Easy iron powder carrier addresses key challenges in hydrogen storage and transport, promising improved operational capabilities for fuel cell applications across various sectors.